morning, everybody. How are we all doing? Oh, that's a quick open. Good morning, Danny. Morning, Monkey. Morning, Vitali. Morning, Paul. Morning, Noob. How are you? I am currently working on storing price data on all possible timeframes from different brokers in a database. Why would you do that? What's the point in that? Morning, Virginia. Morning, JC. Currently storing all price data on all possible timeframes from different brokers in a databases. Why don't you just use tick data? Does the same thing. Tick data's already done this. You just buy it. It's done for you. Doesn't make any sense. Morning, Ismet. Right. So markets opened, broken both ways today. Good day yesterday on the indices again. Really nice. 2 clean breaks, 2 hedges. So both the clean breaks paid for the hedges. So nice profitable day again yesterday. So long FTSE this morning. I've changed my colour to black. Look, we changed the colour yesterday in the members stream. Isn't that good? It's probably not as easy to see as that, is it? So let's use that. So yeah, clean break. Well, started to break long on the FTSE, broken short on the DAX pre-market. DAX has broken straight into yesterday's low, which is obviously potentially supportive. So we may hedge that today. And FTSE, plenty of room to the downside and plenty of room to the upside. So we'll see where we go with those this morning. Because it costs money. That's fair enough. It literally cost $25. But anyway, I'd rather pay $25 to free up my day stroke week on a project than spend a day or week on a project to get the same information I may well look at and go, rubbish. Get rid of it. Buy stuff. Time is the only thing you can't get more of. You can buy everything. Time, can't get that. When the US dollar is rallying, it does not matter which pairs you trade. It takes over everything. Yes. So typically when the US dollar is the world's currency. So when the US dollar is on a run, the market runs the US. And what tends to happen is there's very little movement on anything else. So this is a not so much a theory, but an observation that I've made over time is that the market tends to work currencies. So you might hear the term bandied around by other people every now and again. They're working the US dollar, they're working the yen. And what tends to happen is there will be an excess of required order flow in a particular currency. So what happens is the US dollar will be worked for days or weeks. And you'll find that the pound, the euro, the Swiss, everything else will just sit around and literally range because they're working this. Because there is a financial benefit to doing something with that. So everything else kind of takes a back seat. There'll still be order flow because obviously there'll be transactional orders that need to be placed by the banks and institutions every day. There's always money that needs to be done in every currency, but one gets worked stronger than the other. And it is true. You see that when you look through charts. And it's the kind of accumulation phases where nothing's happening there. If you look at other currencies, you'll find the other currencies are moving while this isn't. But there are times where everything is moving. It's very fluid. So yeah, it's just one of those things. Morning, Sarah, Forex Fire, Jury. Morning, Jury's got a green name now. Look. Morning, Jasper. So this morning in the live in the members stream at 9 o'clock. We are covering target and level indicators. So it's day 3 of the indicators kind of sessions. So we've covered all the condition indicators, signal indicators, what they're used for. Today we're doing level indicators, basically. So we'll be looking at things like supply, demand, support, resistance, Fibonacci, propulsion gaps, bank levels, ADR, distance generally, that sort of stuff. So the last piece of the puzzle, basically, today for indicators. News-wise today so far, nothing much overnight. More missiles left and right in Lebanon and Israel. not an awful lot else happened overnight. We had quite a lot of talk coming out of the ECB yesterday. This was interesting. Came out yesterday afternoon. Ukraine has information about the possible preparation of units of up to 12,000 North Korean soldiers. Not quite sure what they're up to. I suspect Russia's got a hand in it, though. ECB inflation target to be reached sometime in 2025. Disinflation is on the right track. Inflation numbers are relatively reassuring. So basically, Lagarde kind of neutral, but saying everything's going well, everything's going okay, which would indicate potentially a sustained drop in the interest rates, but probably very small now, and probably with pauses in between. So what she's basically came out yesterday saying is there's no reason to drop interest rates dramatically. So it will probably ease any weakness in the euro for a little bit, but it's still going to be bearish. IMF did all of its statements yesterday, which basically was everybody seems to be getting on top of inflation is the outcome of what they said, and that was it. So nothing much else news-wise or newsworthy overnight. Today's the big day. We've got some actual news today. So Canadian dollar interest rate comes out this afternoon at 2.45, 15 minutes after the New York Open. So be aware, when you have a large news event following the Open doesn't tend to put a massive volume in. So you may well find it's a little bit whippy for the first sort of 15 minutes at the Open of New York this afternoon. So just be aware of that if you're trading the opening range breakout strategy variations, because that will potentially cause issues. We're looking for a 0.5% drop this afternoon. No reason I don't think why we shouldn't get given that. And obviously the press conference is where we're going to find out the forward guidance. So what tends to happen with interest rate news with press conferences is you get a whipsaw on the news, or you get a sustained move which stops on the news. Doesn't necessarily need to be an ADR. Sometimes it is, sometimes it's not. It depends how much they factored into that, really. But the press conference is where you get the move. So 3:30, generally they tend to last for half an hour-ish. You get statements coming out, and then you get the press conference. The press conference is where all the questions are asked. The questions tend to be probing, and the bank heads tend to give away information about whether or not you should be buying or selling the Canadian dollar based on what their interest rates are going to do. So after that, somewhere around about between 3:45 and 4:15, you'll probably find the CAD will take off in one direction or the other. So quite a good trading strategy for press conferences is wait until the press conference is starting to come to an end, and then find a nice little range that's been formed in the press conference, 5-15 minute time frame, see what the price has been doing, and go for that break. If that does start a move, and it doesn't always start a move because there may be nothing said that is directional. It may be a case of we'll wait and see what data says, in which case the market won't really know what to do or want to do anything. But if there is something said and it takes off, you'll be looking at an ADR's worth of movement. So very easy to do little stop-based trades off of press conferences. Bailey is also speaking again this evening. We didn't get an awful lot out of Bailey on Tuesday, so maybe something more today, but it is kind of just another speech, and we've had one already this week. Didn't really get anything. This is the IMF sort of speech, if you like. So it's not a press conference one again, so he's not going to get asked a load of questions which are taxing, so it's unlikely we'll get much out of it. But you never know. They have to drop news at some point. This is why these are read. Every talking head has got the power to dramatically change the direction of a currency by just saying what they're going to do with their monetary policy. So we have to listen. Although 90% of the time you get nothing, at some point you will, and when you do, you need to know about it. So you just have to be aware it's happening. I have, when I'm sitting in the evening watching telly downstairs, whatever, I always have my laptop sitting next to me, and I have Financial Juice open on it, and just easy to catch out the corner of your eye a red news event. just in case I need to react to something. So it's always worth watching. And then tomorrow it's PMI day. So tomorrow is a big shake-up day across all instruments. So today is all about the CAD. So we'll see what happens with that one. Hedged on the DAX, clean break on the FTSE. So very much the same as yesterday. So looking for... That's a particularly good support resistance level there. So we've got this double weekly level that we've been using as support resistance. So long break today. There is potential for some kind of resistance here, very strong. So I need to watch this level on the break to the upside. How much is that going to be worth? About 360. Hedge is 350. So if we do get a break, I'll be watching this area today because that will basically pay for that. So hedge on the DAX. I'm not going to go for 5R. I'm going to go up just shy of that propulsion gap to the upside. Downside. Just going to move up a little bit to around about 3.5, 4R to the downside. Which is that potential bounce point here, which is this propulsion move. So that's the bank move that broke the high. So there's going to be orders sitting in here somewhere. So if we can get down to there, I'll exit that. If we can get up to there, I'll exit there. See how we go. But if we can get a nice clean break today, if we get through that level, it won't matter because that will have paid for that. We'll see where we go. Right. Morning, everybody else. Haven't said a morning to you. Morning, Jasper. US dollar seems not willing to stop. Nope, not well. It has stopped. Stopped for 2 days. We haven't gone anywhere. Look. So yesterday we went nowhere, and we exhausted on Monday. So we are sitting. Euro US dollar continued to push down yesterday. I've just taken a small loss on a second trade. I took a second entry yesterday on this. So I obviously had that normal position on. Took that one off, added it back on here. Yep. So it's that basically trade that I took profit on, re-added. Yesterday here, we basically had this whippy price action for about 4 hours here at the previous low. So this was the weekly low that I was hoping to bounce at. We came back down here and basically we had a massive battle between the buyers and the sellers at that point. So I took a second entry, kind of like a little aggressive drawdown control position, but it was only a 1.8. It wasn't a big position. And I decided to put a stop on it in case that bounce point didn't hold, which it hasn't this morning. So just out of that one, I think that's a 0.3% loss, something like that. 0.5. So not massive, but yeah, still going, the US. But look where we are now. So we are going to be hitting this level as the Canadian interest rate comes out. So there is potential for a big, strong move on the US today because US moves with the CAD and vice versa. So, yeah, I'd be looking for another entry down there on that one. 4 or 5 in on that one now. Big push this, big squeeze. But we're pausing on the US dollar CAD. Aussie US has kind of stalled out down here for the last week and a week or so. We're not getting any progress down there. Same with the New Zealand US. It's kind of grinding now, but not really stopping at the moment. But yeah, it's just a painful one. the minute. Are you out of Swiss yen? No. No, I took another one this morning. So I took another Swiss yen this morning. We've got a potential 3-bar reversal going in at the moment. So I've taken this rejection at ADR. We'll look at the ADRs in a sec, but this is obviously a 125 ADR hit. So yeah, I'm in again. Big move up. All the ends. So yeah, US dollar yen pushed up to 152. So the 150 level that we were watching slammed through it. Totally slammed through it. So the question is, what the hell is going on with the yen? You know, this is new territory for everybody. Nobody knows what to do with the yen now because we've never had this situation. We've never had this type of intervention. We've never had a monetary policy shift in 20 years. The yen is now a different currency. So what is it going to do? It's very difficult to read the yen. So I don't really want to be short on it. I do want to be short on it from a fundamental perspective because we know what the Japanese are capable of. However, it costs us absolute fortune in swaps. So when I took this trade yesterday, or rather Monday, when did I take this? Was it Monday? Is it Monday? Can't see when my order is. But yeah, I think I took it on Monday. Oh no, sorry, I didn't took it yesterday, didn't I? No, it's a 4-hour chart. No, I took it on Monday. What am I doing? Looking at the wrong time frame. So yeah, took it on Monday. Pen. Looking for a double weekly top bounce, basically. And obviously we didn't get it. So I had the backup of the 150 ADR, the 150 intervention level on the US dollar yen to hopefully drive it as well. You see it's pushing even further. New Zealand yen's pushing. But yeah, hasn't had any strength whatsoever. It's collapsing again, the yen. So we'll see what happens with it. But I mean, the chances of the US yen squeezing back up to that level, I think, is remote. So there's plenty of areas where we are now. This accumulation, there's been double support. So that break, this propulsion move here, is where the market supported the buyers. Even on the intervention, we got a bounce at that level. So we know this is a very strong level. That's exactly where we are right now. So if the buyers have flipped short, which we know they have because of that, that's potentially where it's going to come back down from. So if the yen powers up from this point, obviously all the yens are going to power up from that point. So we'll see what happens. But yeah, that 150 is not held again. We've had it before though, look. We've dipped above the 150 before the market got shocked. We're a little bit higher than we went previously above that level. And the other thing is, obviously, the Japanese aren't moaning. We know that the Japanese, obviously, when they are worried, they tell us and they say, we are going to intervene if you do not stop doing what you're doing. They haven't said anything for 2 days. So we had a little murmur a few days ago, but nothing since then. So we'll have to wait and see what happens. But I wouldn't take any more yen. I'll take the Swiss yen because obviously the advantage of trading the Swiss yen is you've got two safe haven currencies. So if there's any kind of push pull into safe haven, that one's going to work out. So that's why I took the Swiss yen as opposed to any of the other yens. Also, the swaps are a little bit lower on it. So because obviously there's a massive. If you look at the interest rates, yeah, this is what obviously drives swap. These two are the closest together, therefore the swap fee is smaller. So it's the cheapest yen pair to trade, basically, from a perspective of being short. Just in case it turns into a hold, which you never know. Is it only me that the sound is cutting off? No, people have mentioned this before. I don't know why. My sound is okay. No, everybody else seems it's okay. If it breaks 170, I'm forked. 107. If what breaks 107? What's at 107? Euro. It'll do what it does, do what it needs to do. This is, I mean, you know, we went through this in the members stream yesterday when we were looking at those signal services, basically, that have those lovely equity curves. I put an EA out in the set file yesterday in Discord for the position trader EA to produce that exact equity curve with the ADR reversal strategy. Very easy to do. When you look at previous movement, we're going to talk about this today in the members streams as well. We're going to look at measured movement. When you look historically and measure that move, and then go and the best way to do this, which again we're going to cover today, so I'm just kind of covering the members stream now. But anyway, when you look at a measured move, boxes. Try and grab the box. There we go. So when you look at that, yeah, if you want to look historically at the odds of this thing continuing, go and find some big moves and stick it on. Yeah. And see if you can find a move that big that's ever gone further. That one. Little bit. Not much. Yeah. That one there. Nope. That one there. Without a pullback, I mean. Yeah. So parabolic move without a pullback. That one there went a little bit further. You got maybe an ADR beyond that size of move. But look at the parabolic move here. Look at the pullbacks you had in this one. Yeah, you had an exit there, 100% guaranteed. If you were position trading short from long from here, you were out here. But if you weren't out there for any reason, you were out after that. Yeah, history shows you what the market is capable of doing. Yeah, it's highly, highly unlikely this is going to survive this monthly limit orders here. If it does survive these monthly limit orders, to get through there, they are going to need to find buyers. There are no buyers left after a move. This is why these measured moves work, because... Go away. Oh my God. I can't do anything today. Just want to pick up that box, please. Thank you. There's no buyers left in the market. Yeah. There is an infinite amount of money available to take the opposite side of a position before you go, no, thank you. Because if you dry up, if you think about how we've discussed how the banks and institutions move and what they do. Yeah. If you are a bank or an institution underwater and you turn around and say, no, I'm not buying any more of your sell orders, they can't do anything about it. They literally can't sell, because if you don't buy it, they can't sell it. If they can't sell it, they have no choice but to take profit on the leg they've just put in. This is why measured moves work. This is why ADR works. This is why the average weekly range works. This is why the market moves up and down. It's all just bank and institutional movement. This is the largest move that we have had since 2023. Yeah, you can go back in time further and see if you can find another move that is bigger. Yeah, that's a big move. But look what's inside of this move. Yeah, 50% retracement, 50% retracement, 50% retracement, a V-shaped recovery. Yeah, so look at a 50% retracement on this leg. And again, we're going to be looking at fib today. Yeah, we're coming back here at some point. And it may need to go or want to go further. And if it does, it does. But that set file I put out yesterday just holds on. If you hold on, it will work. Because it always does. Because the banks and institutions physically cannot keep selling forever. There isn't enough money. Morning, Mumo. Please spare some crumbs for followers who can't afford the price of membership. It's 30 quid. Mumo, if I don't know what to say. If you don't want to support the stream, that's fine. I can't help you. Sorry. Sparing some crumbs. I've priced it at the lowest price of any trading educator in existence at £30 a month. If you can't afford £30 a month, I have to say it, how are you going to trade? because you need capital. If you haven't got any capital, there's no point in coming into the member streams because you can't use any of the information. Not being nasty, but I have had this conversation with other people where people email me and message me and say, can you do us a discount on your indicator, please? I've only got $20. Why? I'm doing you a favor by not giving you a discount because there's no point in you spending $20 on an indicator. If you can't spend $49 on an indicator, you certainly can't use the indicator. So what's the point in buying the indicator? Call me old-fashioned, but that is the logic I go through in my head. If you want to make money in this market, you need money. Sorry, I'm not being horrible, but I've tried to price it as cheap as possible, and I do want to get paid for the time I spend. Anyway, I will carry on. ADR. Today, it's all about the yen. Aussie yen, massive push. Let me just quickly check. No, we haven't gone anywhere yet. So all the ADRs today are yen related: Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand, and US. So the yen is on the rally. We can see that obviously on the chart. So quite why this is falling out of bed again, don't know. We'll have to wait and see. But I suspect it's just fundamentals. It's the market kind of trying to figure out what the hell to do with the yen now. So I think what we're seeing here is a return to form. So the yen is a carry trade. The interest rate differential on the Japanese yen is always in benefit of longs. So the market has historically used the yen over the years as a carry trade instrument. As you can see, going back to 2010 here, yeah, we long it. It's a bit like a stock index. However, you get to the point where you can't long it indefinitely. We've already just discussed this morning, because you will financially bankrupt Japan. So they export all their goods to every other country. If you make their currency invaluable, or rather valueless, they will stop exporting because they won't be able to manufacture. So there has to be a point where you call it, and usually it's the 150 level, as we've seen. That's where in the past the Bank of Japan has said, no, if you do this, we will stop. We'll stop being part of the financial movement, i.e. you're going to bankrupt us. Yeah. So typically this is where the banks and institutions tend to give up the ghost. However, we obviously had that, which caused the huge intervention move from the Bank of Japan. So market seems to at the moment want to be setting back to its old ways of the carry trade, which is what it's always done. So quite what's going to happen, I don't know, and I don't think the market really knows. But when you have something that has worked for decades because you've had negative interest rates which you can play off against, it's very hard for you to conform to anything else. And I think this is what we're seeing, is basically the banks and institutions for the last 6 weeks, as you can see here, have just been going, right, well, let's try the carry trade again. And unless the Bank of Japan steps in and says, no, we are not going to be your carry trade slave, I was going to say something else then, anymore, it will continue to happen, I think. So we'll wait and see what happens. But this is where you will find out any clues as to whether or not they're going to do the intervention again. And it may come down to that. So we'll have to wait and see. But anyway, so US dollar yen, obviously we're up at the highest point we've been for a long time. So you can see basically with RSI, when you get up to these levels, we tend to get some kickback. Didn't there. That was an intervention. Didn't there. You see, so it's not quite as cut and dry when you've got the force of making money by literally pressing a button on your side, which you have with all yen pairs. So hence me being short is slightly worrying. And when I press the button on it, I thought very hard about pressing the button because of what happened last time I pressed the button on a yen pair. But you know, after what they did with the intervention, it's very hard to look at it and say, well, we're going to go back to what we used to do before. But So these are all ADR hits today. So from a short-term scalp perspective, obviously you've got propulsion gap targets to the downside to target. There's very little support resistance you can find on any of these yens. So if you scroll out, you know, because we are running into basically a void caused by the intervention. So that was the initial intervention move and continuation. That was the pullback that we put in, which we've been sitting around at for 3 weeks now. You know, there's very little you can pick here. There's that point there. There's a little accumulation there, which is an area. And then you got this whacking great drop to here. And that is what we've just broken out of, or we are breaking out of. Again, we haven't broken out of this level properly yet on the Aussie dollar yen. So you've got this whacking great void here, which when you measure it is huge. It's 300 pips. It's 80, the ADR on this. So you're looking at a 3 to 4 ADR push potentially before you find any kind of level resistance. So it's a tricky one, but they're all kind of short scalp opportunities, all very extended on all time frames. Yeah, even on the daily we're getting there. Yeah, it's getting to the point, you know, where you've got to say something's got to give at some point. But as we know from the yen, it can continue for a long time, which is why it's not the best thing to trade position wise. That set file I put out yesterday, I did put out a caveat on that set file. Doesn't work with the yen, doesn't work with the Swiss, because it's they are strong trending pairs. And obviously when you're looking at ADR mean reversion setups, strong trending pairs are not going to be the best thing to trade. So if you are going to take a yen, limit it to one. But yeah, so those are all your ADRs today. Nothing's hit weekly. Obviously, we've had a quiet week so far. US dollar yen is now extended beyond 125 of its monthly, as you can see. So month started here. So we are now 125% of our monthly range. We have got an area here which we're kind of blowing through at the moment. This accumulation, which is that previous level there, is still miles away at the high of that. So anywhere in here you could find resistance, but this is more likely to move on PMI tomorrow or on CAD interest rate today. Yeah, so the more likely reason for this to pull back is that, rather than that powering up. But we'll wait and see. But as you can see, it's all over the place at the moment. This is why I took the yen off my radar, because it is just same as gold. Yeah, when I look back at my P&L over the years, the reason I don't trade gold is because gold has kicked me in the arse more than anything else. Oil has done the same. Commodities, not good. Yen pairs, safe haven pairs, not good, because they go into these ridiculous runs because they have no power, no strength, and you can tell by the interest rate. Yeah, all other countries can control strength of investment and control spending and everything using interest rates, and they do it on a regular basis. The Swiss and the yen do not use that as their main control mechanism. They don't need to, because their economies are totally different. Look at the unemployment rate in these countries. Yeah, everybody's employed, their economies tick over nicely. They don't need to continuously change all of this to make sure that their economy and their GDP stays sound. The rest of us do, because we're not as good as them managing everything. So when we have any problems, we tend to stick our money into these two because, you know, they're stable. That causes huge sustained trends. So hence the carry trade on obviously the end. So yeah, so those are your weeklies and monthlies. RSIs telling exactly the same story today. All extended on the hourlies and the 4 hourlies, some more than others. Pound yen is hourly extension. That's about to trigger a 4 hour as well. So that's just about to get alerted. New Zealand yen and US yen. So it's the only thing moving at the moment. Yeah. So with any strength, everything's moving, but obviously just with not as much strength. So New Zealand yen hasn't broken out of that range yet. Look. So we're up at the weekly high. That's previous week's high off of that candle there. You've got a monthly high. So this whole area here is a really good sell zone. Targeting back down to there. Or if the yen isn't going to let that move happen, back down again. So lots of opportunities at levels, which is good. Which is, funnily enough, what we're talking about today. Could the move on the US dollar be a short squeeze? Yeah, that's what it is. Yeah, 100%. That's a squeeze is a squeeze. Basically, any move you see like this is them squeezing the shorts. If they're not squeezing the shorts are squeezed as a byproduct of a move happening. Yeah. This industry's got a lot of terminology that different people use for different things, and everything that everybody says in this industry is based on their opinion. Yeah. So some people will be convinced that this is the banks and institutions squeezing the retailers out of the market to make sure that all their money disappears. Although the banks don't actually know you exist, because the amount of money they're putting through this market, there isn't everybody. Every retail trader on the planet could press the sell button at the same time. The banks would just go, thank you. And it wouldn't tick. Yeah, we haven't got enough volume to move this thing. Yeah, the banks do it. So a lot of people, though, don't believe that. And they think that this is the banks squeezing all of and stealing all of our money. Conspiracy, yeah? Some people think aliens are around. Donald Trump at the moment thinks that the Labour government is in conspiracy and he's suing us because we're affecting the elections. There's a lot of conspiracy theories out there, but a short squeeze basically is a term meaning that anybody that is short is being squeezed. It's true. We are. I am. I'm in a squeeze at the moment, but they're not doing it to get me. They're doing it because they're doing it because there's more weight of orders in that way than there is in that way at the moment. And that's typically down to fundamentals. However, the long-term bias is that versus that. So the reason for that is not really there. And like I said, at the beginning of the stream, stick a box on it. And then that one. And then go and look at previous moves that are similar, if you can find some, and look what happens. Yeah. This is the profit take. Because you can squeeze as much as you can, but eventually, think of it like a sponge. Yeah. The short orders here are the water. The long orders are the sponge. You squeeze that sponge long enough, eventually it will stop dripping. The drips are the short orders. The banks need to execute the long orders. If there's no more short orders left, the banks can't execute long orders, which means they're left with what? A shed load of dollars in a position, and every time it ticks against them, their P&L drops. They have to take profit on their order to make money. If you buy, when you exit a position, you do the opposite. When I press this button, when I close it, I'm actually pressing that button. The banks do the same. The institutions do the same. Everybody that trades does the same. It's a two-way directional transaction. There is a buyer and a seller. The transaction, the tick happens when these two meet each other at a price point that is mutually beneficial. No one's going to do that anymore, because if they've done that already, there isn't any left. So it will come back the other way. The art to position trading is surviving the squeeze. Yeah, and this is where people go wrong. They just cross their fingers and hope that it will come back at some point, and it will come back at some point. However, we have a thing called bank balance and margin, which means that we do not have the one thing that banks and institutions have, which is an endless pot of cash to continue to do what they want to do. Yeah. If there are people willing to press that button, they will keep pressing this one until you're not there anymore. When you're not there anymore, they will go, thank you very much, I'll have that. And they'll take it. And this is where the climbing up the stairs, falling down the elevator shaft comes from. Yeah. So the undoing of a squeeze tends to happen within 24 to 48 hours. The squeeze itself can take days to weeks. That's just the way it works. But that set file I put out yesterday for the position trader EA, it uses 0.1 risk. Yeah. I've got it loaded now, I think. Yeah, so we're using 0.1% risk over an ADR. So we're taking a tiny, tiny position. And this is basically what the banks and institutions are doing. They're continuously adding and taking tiny positions out of the market until there's none left. And if you continue to do that, it will work. Set file does not put a single trade on MT5 for some reason. Don't know, something wrong with your data, maybe. That set file's for MT4 for a start. I don't use MT5, but it should work on MT4. MT5, I don't know, but yeah, open up the set file, have a look at the settings, and you can mimic it for MT5. But yeah, I mean, you know, this is a squeeze. Look, this bubble is a squeeze. This bubble is a small squeeze. But the vast majority of the time, the market pushes and pulls, and you get the occasional squeeze. Position trading is about surviving the squeeze with as little loss as possible. You will always survive the squeeze if you don't use high risk. Yeah, the reason everybody fails in trading is because they want to make money to make a Lamborghini as fast as possible. Why have we stopped? We're in a squeeze, right? We stopped the results because we're in a squeeze at the moment. This is a 3-month squeeze. The reason I've got this one up here in my 20 minutes in my analysis, just watching where we are with that, is the Aussie dollar CAD had a 3-month squeeze. Just load all this in quickly just to explain it. So Aussie CAD oh, this is running over 4 years. Yeah, so this is 2021. So in 2021, the Aussie CAD had a period of 4 months where we had zeros because it was squeezed for 4 months. And it just came out at the end of it and made money and carried on. But the reason it didn't make money for 4 months was because the market was squeezing. But the market had to stop squeezing because there was no one left to squeeze. So that just takes advantage of that move and it exits it. But what it's doing is it's using a risk profile that means it will never blow. And that is the art of these all these signals out there that you see that have been going for a year, 2 years or whatever. They're using nothing because it means that they can get into the market and stay in the market indefinitely until the market turns the way they want to. There's nothing wrong with that. Banks, institutions and pension funds have been doing it for decades and they still do it today. It's called trading. It's what we do. But it's all about managing the risk, the initial risk. So when you put a portfolio together of all of those combined, you get that, a beautiful equity curve, because you just wait for the market to come back in your direction. Drawdown got to 6K, 6%. But that is closed drawdown. So closed drawdown using position trading methodology, you need to X2 stroke X3 it. So that with open drawdown probably would have achieved somewhere in the region of 18 to 25K or 18 to 25% of drawdown. So your account would go into 25, let's call it 30% drawdown. So 30% drawdown to achieve 111% return. Averaging, that's got the wrong data in it. It's on the wrong. Averaging somewhere in the region of 2 to 8% a month, every month. Because what we were discussing earlier, what is being squeezed at one point, everything else won't be being squeezed. You can only squeeze one currency. There's a limited amount of money supply that you can put a squeeze on with. So the US dollar will be squeezing. It's very, very rare. And I think it's probably happened once in the last 5 years since COVID, really, that we've had two currencies squeeze at the same time. It's just unbelievably rare because there's just not enough liquidity a day to squeeze two currencies to the same extent, because you have to use one currency to squeeze the other. This is what Forex is about. There's a base and a cross. They can't both squeeze at the same time. So that's what that set file does. It basically takes advantage of that. But you use a tiny, 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 tiny risk. Yeah, but this is closed drawdown. And that's the important thing to understand. We covered this in the member streams about strategy development and robustness testing. When you're testing position trading strategies, that figure isn't real. That figure is the closed orders. Your open drawdown will be 2 to 3 times higher than that. So whatever you get there when you do analysis, you need to treble it. I usually treble. If you put, say, treble, quadruple, what this basically tells you is what account size do I need to make that? Right, well, it says that. So if I put 30K in an account, that's achievable with a 30K account. But obviously, you'd need to adjust the risk. But anyway, won't go into it in any more detail. The other thing about this as well is I put this in there as well, correlation. This is all FX pairs excluding yen and Swiss. But as you can see, the New Zealand dollar, US dollar, and the euro US dollar have 81% correlation, meaning that they took pretty much the same trades 8 out of 10 times. So you are doubling your profit, but you are also doubling your risk and doubling your drawdown by trading the New Zealand dollar, US dollar, and the euro US dollar next to each other. And again, we covered all this in strategy development week. But important to know about correlation. The pound US dollar and the euro US dollar are 44% correlated. So half the time when you go long on the pound US dollar and you go long on the euro US dollar, half the time you're going to be sitting in the same price action, the same movement. So just, you have to be aware of it. We covered correlation last week, didn't we? Important to understand. But there you go. We're running out of steam a little bit here. Starting to roll over. So that's a lower high and a lower low just gone in now. So that's the first proper bear candle we've had. Had one there as well. See how we get on, but might want to watch this if you're long FTSE. It's this propulsion. Well, it's not really a propulsion gap. It's the end of play on Monday, but that is where they sold yesterday as well. So this is basically where the sellers stepped in. So to run them over, we're going to run them over and run straight into limit orders at weekly resistance. Look, so it's quite a tough area to get through for the market here. We'll see if there's enough today to get through it. I know you don't trade gold. Could you please talk about why gold is so bullish? Because the bear, what, bullish? So it is. No, don't know. Don't know. This is why I don't trade gold. I don't know. It's a commodity. There's two things driving this. And the problem with this currency is it's confusing to me because of two things. First, gold price, in theory, gold price should always be going up. Yeah, we've locked away half the gold supplies in the world in Russia. There's an import-export ban. Therefore, supply is down. Demand is not changing. Therefore, the price goes up. Yeah, so supply and demand. All commodities are supply and demand driven. There is demand for this. Supply is restricted. Price increases. It's a US dollar cross, meaning that if the US dollar is rallying, typically this goes down. As you've just pointed out, for 2 weeks it's been going up, as the US dollar has been doing what for 2 weeks? Look at the US dollar index. Yeah, it's been going up. So if gold is going up at the same time as US dollars are going up, and that is a US dollar cross, doesn't make sense. There you go. In a nutshell, why I don't trade gold. It's totally illogical. And it goes like this. Yeah. Again, remember what doesn't work for position trading. Strong parabolic trends. This is going back 12 months. No, it's not. It's an hourly chart. It's going back less than that. But look at the last 12 months, roughly. Not too bad, actually, at the moment, is it? You're going to have periods of like 2 months in drawdown, exit. 2 months, 3 months in drawdown, or weeks in drawdown, exit. I don't trade it. You know, there's no point in me talking about something I don't trade because I can't really give you any analysis on it. Doesn't make sense. 99.9% of the time, when gold, US dollar is going up, gold is going down, and vice versa, because this is a US dollar cross. This is gold US dollar. This is pound US dollar. This is euro US dollar. Look at everything crossed with the US dollar. What's it doing? Going down. Yeah. This is gold crossed with the US dollar. Don't know. Don't trade it. Euro US dollar exceeded 125% of its monthly. We should be longing it with 1 million lots at the moment. Up to you. I would rather long it with 1 million lots at a point of... There we go. Exactly, yeah. There you go. So, longing it at a point of interest. So there'll be limit orders sitting at the monthly lows. And if you watch price action on the lower time frame, we should be seeing order flow start to change direction here. However, monthly, the thing with levels, again, we're going to cover this in 9 minutes, but the thing with levels is the older the level is, the less reliable it is, because the conditions here 2 months ago, or nearly 3 months ago now, are different to what they are today. Yeah. So look at the interest rate back at the beginning of August. Now look at the interest rate. Look at the inflation figures at the beginning of August. Now look at the inflation figures for both the euro and the US dollar. The market longed here because that was the right thing to do at that time. Is it the right thing to do at this time with the euro being bearish and the US dollar being bearish? Yeah. Things are different, aren't they now? Back here, the market was in a completely different situation. So, but you will find there will be orders sitting there. Whether or not they've made the money, which it looks like they have to me, and they need to add more to it, that is what you find out when you get to previous levels. Yeah. There either will be or there won't be limit orders, and it's usually very clear. If you blow through a level and you're unable to get back within hours or days, that level is not working. However, when you reach a level like that with exhaustion that we have in this case, it's hard for the market to break as well, because it is so exhausted. There's so little volume left in that direction. You tend to automatically bounce, because these guys will be watching this level and looking for signs that they should exit their positions. Yeah, and if we suddenly get a whacking great bull candle going this afternoon on the news on the CAD, they'll all be going, this looks like the exit point, guys. And as they exit by hitting the buy button, they create upward movement. As the upward movement is seen, the buyers get interested and start adding buy positions, which is why it gets 200, 300 ADR in one day, because everybody does the same thing at the same time, because they're seeing the same thing. Just what happens. It's just crowd mentality, following the herd, isn't it? Small lots works for me in position trading. Yeah, it should. It will. That set file does not put saying. Oh, I answered that one. Yeah, I don't know. I've never tried to load an MT4 set file into an MT5. Morning all, late and absent yesterday. That's okay, Georgie. You were allowed to have a day off. Everybody can have a day off. Right. Okay, so we're pulling back from that level. So looking for the opening range break today, which is these two candles. So that high of that propulsion gap, low of that propulsion gap, one big propulsion area. So looking for the buyers to dive in at this level, and then see if we can test this area here. But we are, you can see exactly where we are moving here. Look, this high, we broke, tested and bought, tested and bought, tested and bought. So that was a previous resistance, turned support, 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 came down, resistance, resistance. So very strong level, high probability of the sellers that started this propulsion move here. Yeah, adding again into that short because they want to be back down here. So it's a case of whether the guys that started this big buy move in New York yesterday can add more volume. It's a battle. These are battle lines, these propulsion gaps. So this is where the short battle lines are. This is where the long battle lines are. So the battleground at the moment is here. We're either going to break that or that. So we're going to come and test this area, or we're going to test this area. But this is the fight. So we'll see how we do today. DAX is weak. So DAX today, if we break short, obviously I'm targeting this previous propulsion move. So this is where we accumulated and the buyers started a buy move. So I'm looking for them to add at that level there. But I'm not sure we're going to actually get a massive move today, because obviously the market's going to be wanting to see what the Canadian rates do, because they will affect the US, and the US obviously affects the stock prices, because that's what they are bought in. Yeah, look at the Dow today. Look, Globex session this morning, absolutely dead. Look, no movement whatsoever so far today in Globex. It's just sit around and wait until 2:45. Right, so that's it for me today. We'll watch this euro US dollar. This is a key level here, so want to see some buying come in. I've got a long going on exactly here, so if we do manage to wick through that level, I'll be getting a long on, which will obviously bring my average down. At the moment my average is a little bit far away at the minute on this one, but I have to wait and see. Anybody got any other questions? If you're watching this on replay, use the comments. If you've got any questions, you want to see any information, discuss anything, look at anything in specifics. If you're coming into the member streams, we'll be starting in about 5 minutes. We're looking at the target and level indicators. So this week we've looked at condition and signal indicators in detail. And the last piece of the puzzle is the levels. So we'll look at those today. And then tomorrow, we're going to see if we can do some daily strategies. How from average do you prefer? How far? As close as possible. So I'm always looking to try and keep my average within ADR as much as I can. Yeah, so want to try and keep price within the average daily range for obvious reasons. That's the average that it moves in a day. So if I can keep my exit within the average day, I'm going to get out on average. That's basically the theory behind it. It's not rocket science. It's just trying to keep your average as close to the average movement of the instrument you're trading. And as you can see, the euro US dollar, for example, at the moment is sitting up at 225. So, but you know, the next entry on that is going to bring this down. You know, and the thing you've got to think about is, and you know, looking at the ADR dash. The reason we use ADR is because ADR is exceeded often. Yeah. 125 ADR is exceeded 23% of the time. So if you look at an average week having 5 days in, roughly 1 day a week, we will exceed ADR 125. So if you keep your average within ADR, that 1 day of the week we put a 125 ADR in, you're out. If you can keep it within ADR, we know that we exceed ADR 42% of the time. So roughly 2 days a week, we'll exceed ADR. So if you're within ADR as an average, you can get out, usually within a week. When you get a squeeze on, your average is going to get further and further and further away, because every time you add a position, you're moving price closer to the price now, but a squeeze is a continuation. So you get further away. So as price moves down, this morning when price opened, this ADR line here was 18 pips higher up. It was up here. So that this morning was about 200 ADR. But as price pushes down, obviously the lines come down. So that's the goal. But it's not possible to keep price within ADR. You know, I'm 125 ADR away. You know, look at this US dollar CAD squeeze. Yeah, look how strong this is. We have had 9 solid days of buying without stopping on this thing. We've had a flag break long into a double top. Yeah, but my average is 125 ADR away. I'm looking for something that happens 23% of the time to occur. That's it. One day. And this is where, when you look at your P&L, people will always worry about their P&Ls. Oh my God, my P&L is just getting worse and worse and worse and worse and worse. And you'll have seen me do this many, many times. Be coming in here, sitting in drawdown, and then I come back on the next day and I'm like, whoo-hoo, made 7% yesterday. I need to get some risk on because I'm flat. Because everything undoes at the same time. If the Canadian dollar today has a massive bull move, I will be out of this afternoon. Yes, I've sat through it and it's been painful, horrible trade. That's what trading is. It's not right most of the time. If it was right most of the time, we'd be billionaires, wouldn't we? You're wrong most of the time. It's about managing the risk and waiting for the price to do what the price needs to do to get you out of the position. That isn't in your control. You're getting on a train and the train is going either to the station you want it to or it's going to the other one. If it goes to the other one, you need to get off and get on again. If it goes on the other one, you get off and get on again. At some point, it's coming back to this station. Your job is to sit on the train and wait. And if there's a bar, have a few drinks. So it's what you do, isn't it? Right, better go because I've got to go to the member stream. So anybody coming in there, I'll see you in 5 minutes. Otherwise, I will see you guys tomorrow, hopefully. Yeah, we'll watch what happens with this. I'll post the results of this in Discord later when the market has played out. All right, have a good day. Anything you need, let me know in Discord. Otherwise, I will see you next time.